Hi, my name's Alan Madden from Madden CPA. Are you a Canadian snowbird dreaming of sunny winters in the US, but worried about the tax challenges that come with it? You're not alone. The snowbird dilemma is a complex issue for Canadians who want to enjoy the best of both worlds, escaping the harsh winters up north while still retaining their Canadian tax residency. But navigating the tax rules on both sides of the border can be tricky. In this video, we'll break it all down for you. You'll learn how the US Substantial Presence Test works and why it's crucial for snowbirds, what steps you can take to avoid being classified as a US tax resident, the importance of IRS Form 8840, and how it can save you from unnecessary tax obligations. Potential pitfalls like FBAR requirements, penalties, and even state-specific rules. Stay tuned because we're giving you everything you need to know to navigate the snowbird lifestyle without getting caught in a web of tax problems. Let's dive in. Under US tax law, Canadians who spend an extended amount of time in the US may be classified as resident aliens for US tax purposes if they meet the Substantial Presence Test. This test calculates your presence in the US over a 3-year period using the following formula. Count all the days spent in the US in the current year. Add 1/3 of the days spent in the previous year. Add 1/6 of the days spent in the year before that. If the total equals or exceeds 183 days, you will be considered a US resident alien and may be required to file a US tax return, Form 1040. For example, if you spend 150 days in 2024, 100 days in 2023, and 50 days in 2022 in the US, that would be 191.6 days. In this example, the individual exceeds the 183-day threshold and would be required to file as a resident alien with the IRS. Snowbirds can avoid US tax residency by demonstrating a closer connection to Canada through IRS Form 8840, Closer Connection Exception Statement for Aliens. This form establishes that despite meeting the Substantial Presence Test, you maintain stronger residential, economic, and personal ties to Canada. Factors that demonstrate a closer connection to Canada include maintaining a permanent home in Canada, having family members, dependents, and financial ties in Canada, retaining memberships, for example, clubs or social organizations, and personal property in Canada, spending the majority of the year in Canada. Filing Form 8840 must be done annually, and failure to do so could result in the IRS treating you as a US resident alien for tax purposes, with all the associated tax obligations. Reporting foreign assets with the IRS. If you're classified as a US resident alien, you're required to report your worldwide income and disclose any foreign financial accounts under the Foreign Bank Account Reporting (FBAR) regulations. The FBAR filing threshold is triggered if the total value of your foreign accounts exceeds $10,000 at any time during the year. Failure to file the FBAR can result in steep penalties, starting at $10,000 per account per year for non-compliance, even if the failure is unintentional. Impact on Canadian businesses. In addition to the FBAR considerations, snowbirds who operate Canadian businesses while spending time in the US face additional reporting obligations. For instance, if you own a Canadian corporation, you may need to file IRS Form 5471 to report your ownership and activities related to the business. Non-compliance with Form 5471 reporting carries significant penalties, starting at $10,000 per year, staying below the substantial presence threshold. To avoid triggering US tax residency, snowbirds are advised to limit their time in the US to fewer than 122 days per year. This ensures that their total over 3 years does not meet or exceed the 183-day threshold. Keeping a detailed record of your days in the US, including entry and exit dates, is crucial, as US Customs and Border Protection tracks this information electronically and shares it with the IRS if requested. Additional considerations. One additional thing you'll want to be aware of is state-specific tax obligations. Even if you avoid US federal tax residency, certain US states such as Florida or California may have their own residency rules that could impact you. The Snowbird Dilemma highlights the need for careful planning to balance time in the US with the desire to retain Canadian residency and avoid US tax obligations. By understanding and adhering to the substantial presence test, filing the appropriate IRS forms, and maintaining strong ties to Canada, snowbirds can enjoy their time abroad without encountering unnecessary tax complications. For tailored advice, consult a tax professional familiar with cross-border tax issues. Thank you for watching this video, and if you have any questions about snowbird status, don't hesitate to reach out. My contact information is listed below in the description. Bye for now.